I've decided to target my PayPal stock because as you can see, there is a support I can sense. It's been trying to climb for the last few months from low as 50 all the way to here. Now you might say, why didn't I target it here? Because I wasn't sure what the stock was going to do. Even though it was climbing here, consistently here, there, here, and here, and here. I was at two minds whether to target it or not. But also I was busy targeting other stocks and trying to bring money out of other, so to speak, dead stocks. So what I've done now is I found that here's support here, right where it is. So I've decided to buy some more. I've put a order for 10 stocks at the current price. I'm happy to pay at the current price. It could drop further. I'm not too concerned with it if it drops further, but I think there's some sort of support here. Now the idea is that once I lower the price, I should lower it by a little bit, not a lot. Now even if that's lowered by a little bit, in theory once, twice, three times it went past my mark for a tiny amount of profit, but obviously I was losing money because of the FX. So now in theory I should be able to come out with a little bit of profit. That's the idea behind this stock. Sometimes on a stock that you are losing money on, you could make money on it, and I've done this on my other account, on such as like Plug, for example. I've made money on Plug number of times. Where is it gone? Let's go out of here and then I'll show you quickly. So Plug, I've made money on it. But you might say, why don't I then go in with the jump and try to bring the average down? Because at the moment it's about 30% difference. That's because I'm just not too confident with the stock holding or going up further. I mean, it could go up all the way to my current position and it come out with a break even, or even a profit, or even a small loss up to $6. It might go up to $6, but there's also a possibility 50-50 chance it could go down because it was graded down and it didn't do well in its report, annual report, earnings report. So there's a number of things going on, plus the psychology behind it, because in total I have almost well over nearly £2,500 in this stock. As you can see, I'm losing by 750. Now the problem here is that obviously I'm losing by FX as well. The problem here is that if I lose that money, if I put more money, I'd have to put about £5,000 to £7,000 in order to bring that average down to somewhere here where I can come up with a profit potentially. Now there's a possibility of me doing that and coming out with a success, but in my head psychologically I'm just not confident, opposite, actually I'm quite confident, but I'm just not comfortable with having potentially £7,000-8,000 stuck in one stock, and if it drops further from this point, the problem with this stock is that the difference between each 0.10 is massive. We're talking about a couple of percentages and even 10-20%. So if that drops further, if it drop back here, then I'd have to put far greater money to bring it down, and I'll be chasing this falling knife that could literally cut me. Another problem is that when you have a lot of money like this kind of stock, where I have a lot of money stuck in it, averaging down on it is much harder. I can't emphasize this point enough. So strategically, I'm actually leaving it here, although I am trading on Plug on my other account and I've made profit on it. But I'm also, there you go, purchased. I'm also looking to see what happens with the Plug, and then okay, so I've managed to chip away. Yeah, look, I managed to drop it down a little bit. It was up here, I dropped it down to a reasonable point. So now the gap between my profit and loss potentially is just over 2%. I'm risking 2% for potentially a 2% profit. I'm happy to come out from this stock, PayPal, with 1% to 2% profit, to be honest with you, and then go back in and trade, because as you can see, I've got over 1,500, nearly £1,600 stuck in it, and I've had that money stuck in it from the day I traded. This was part of my strategy at the time when I began trading, which was kind of long-term strategy. But then I quickly figured, why do that when I can quickly flip 4 or 5% here and there to make up 10%. So I'm already on 10% profit anyway, and I've traded for 6 months. With 1 month gap, I did not trade at all, and in the beginning obviously I did not trade. So really and truly speaking, in 4 months essentially I've reached 10% profit anyway, which was my average even ambition goal for long-term trade. But now that I'm doing swing trade, it's very different. my strategy is different, the choice of stocks are going to be different, everything is going to be different, and there's a whole game plan to this. So for example, you might say, why am I going, in the past I've had 1,000 or 2,000 pounds stuck in NEO, I've come out with a profit. So you might say, why am I going with less then? Actually, I'm going to buy more shares. It's purely because I've done this 6-7 months. I know how things work, I know how it moves and what happens. Look at the difference. So if I gone in there yesterday when it dropped from here to there, and with the false rebound, I would have been stuck. That's the reason why I did not go in. I anticipated it will drop further, which it did. Now this could continue to drop further even more tomorrow, all the way till next week as well. That's fine, and it's not surprising. Look what happened within a year. It dropped up here. I was once here, it dropped all the way here. So the beauty of going like this, the way I do it, is that yeah, I got 55 shares. There's a difference now between me and my position. It's about 4%. Will I come in here? I probably will buy a couple of more shares. Maybe I'll buy 20 shares. I won't buy another 55 shares because here it's hard to predict whether it will hold here, because yeah, you can say it could drop here because there's a previous low, right? And you can, even here's previous low, so you can say here will hold, resistance here, support here, right? Well, not necessarily. You can say, well, support here perhaps. Maybe so. Maybe here, maybe there, maybe over here, maybe over here, maybe on the previous high, maybe over there. When a stock falls quite rapidly, it's difficult to predict the support. However, you can go with best guess approach. Now, that overall stock is on a climb. As you can see, it's on a climb. Well, last month it's been on a climb anyway, so it's got a little bowl shape, so it's on a climb. I'm confident even if it drops further, I don't mind going in. I like this stock. I've traded on the stock with profit many times, so I don't mind it dropping further. I'll have enough money to average it down. The harder it falls, easier to drop, easier to close the gap. But at the same time, if your total investment is greater, you will need to invest far greater amount of money in order to close the gap. So when you're stock trading, especially swing trading, it's not just a matter of, okay, I'm doing this, I'm doing that, or look at the chart, this, that. No, it's not necessarily the truth. This is not necessarily true. There is also game plan. You have to implement different strategies and a different approach. Like I said, is that if you invest too much money, you need more money to close down the gap. Some people, what they will do is they'll cut the loss, okay, and then come out. I don't like that at all whatsoever. I think when you have a mindset of taking loss regularly and then taking profit, but then when you take profit, you can offset your difference. I get that mindset, but in my world, that's not a good mindset, because a loss can do a lot of damage to your mentality and approach. Like I said, I'm on a trajectory on one of my accounts 16%, on my other account I'm on a trajectory of 25% ROI per year, and I've achieved this without loss mentality. Why should I take loss mentality when I can simply average down and come out with a profit? Surely that's better than taking a loss. And again, there is no such thing as golden rule in swing trading. There is no such thing as this way or that way. I guess. I mean, it's clearly evidential. It's proven this strategy works for me. This strategy is less risky, and it could work for others as well if you implement it right. But you have to understand the stock itself. You have to get used to it. You have to pick the right stocks, and stocks move constantly. But I have my own favorite ones that I have traded many times off, and I got a good understanding of those stocks. But again, I've also learned to be disciplined. So here, as you can see, I got £8,000 free fund, or nearly 9,000. I'm going to keep that fund free. I'm not going to invest anymore, I don't think. I'm going to wait for potential drops. And also here's another point. See, like United Health, I got £8 profit on it. If I don't pull out £8 profit and reinvest, it's not done me any good, really, not in terms of compounding. Yes, it could go further. I probably will wait on this one. I'm not in a rush to, actually, I might pull it out. So see how it is today. Yeah, see how it is today. I might pull out of the stock today. So it's just, I'd rather take 3-4% profit, like here. It's on a, small 4% profit. I'll take it. You might say it's £8. Well, look, £8 times multiple times, guess what? It's a couple of £1,000 very quickly before you know it. So, but again, I'd rather take, affordable, manageable losses strategy than going in and losing a lot, winning some, losing some. It seems a bit like gambling. I don't like gambling. I'd rather stock trade properly.